Good afternoon and welcome to today's webinar with Mirriad Advertising PLC, who reported their half-year results on the 22nd of August. We're delighted to have with us today Stephan Beringer, CEO, David Dorans, CFO, Mark Melvin, EVP of Sales and Brand Partnerships, and Philip Matimo, the CTO. So I'd now like to hand over to Stephan to start today's presentation.
Thank you. So thank you again, Alex. Thank you, everybody, for making the time today. Just as a means of quick introductions, you probably know me, CEO of Mirriad, joined late 2018. Philip Matimo joined us in early 2021 as our new CTO and bringing a huge depth and breadth of entertainment and platform technology expertise, as you can see here. Among other, has been working and developing products for Sky, TalkTalk, Skype, Wise Music, and others. Mark Melvin, just a slight correction, Alex, is our general manager in the United States or for the Americas, so North America, including Canada and Latin America, and has been working in multiple functions in very prestigious companies, including Disney, Fox, Comcast, and others. And David Dorans, who everyone probably very well knows, has been with us since many years in my time, with a background in media and entertainment and with operational expertise as well. So coming to the agenda, and we will try to be quite rapid today so that we have a good and abundant space for the questions that you will have. Briefly touch on the investment case, then go into company headlines, and then I will hand over to Mark and Philip, who really should also be the main acts today, because it's important that everyone on this call hears from the very, should I say, front lines what the progress is. With, from a market development standpoint, and of course also from a platform and technology standpoint, and then finally we'll have Q&A. What I'd like to do first is to run the video that encapsulates a lot of the work, or mainly the work that we've done in the first half of the year. And you will see some new numbers. You will see some very impressive stats in terms of the coverage and the market position that Mirriad has now achieved and where we are. Mark will expand on that, of course, later on. But I think this is a very good and very impressive representation of where we are as a company and as a market leader in this now emerging segment. Let's let it on. All right, let's move to the investment case. And in principle, in terms of the rationale for the investment case hasn't changed really at all, I should say. What has changed, though, since the last time we've spoken, is the development in terms of where we are and in terms of the opportunity, our position, and our relationships that we've built. And basically now, and Mark will elaborate on that way more, really ready to go for the big prize that we've been working towards for so many years. The opportunity, as we all know, is gigantic. We're talking about the media advertising market in television and video that really hasn't changed so much since 50, 60 years. People still are interrupted by advertising. And when you read, and I encourage you to do this if you have the time, when you read the earning reports of all the major entertainment companies, you will find a pattern that goes across all of them. And this pattern is about steeply decreasing advertising revenues on the, let me call it, the traditional side in terms of television and cable, rising subscriptions, yes, on the VOD, so the streaming side, however, not infinite growth, hence, or therefore massive pressure in terms of revenue pressure on all these companies, including Disney and everyone else. We don't need to name any of these companies, adding or actually really now unleashing an enormous pressure on the industry to find new solutions in terms of new revenue streams. And the drama, I have to say, and Mark will confirm that, has really come to bear literally over the last couple of months. We've seen a couple of companies, NBCU and Amazon, announce in content as one of the solutions last year already and developing against that. We'll touch on that in a few. But this very dramatic change of mood and change of sort of realization that there's a real train crash coming our way, or the way of the industry, has become now very evident in the last couple of months. So what have we done? We are leading the industry now, and we can later on we can talk about where we are also in terms of the competitive set. We are by far the most adopted in content advertising. There's a typo there, platform in the US and EMEA. We have very strong momentum with the majority of US entertainment giants, and that's not a small thing. On paper, when you just read it like this, you might say, yeah, whatever, I hope not. But the reality is we are talking about the biggest entertainment giants in the world, who happen to be all based in the United States of America. And we're basically either negotiating contracts or already testing or about to test with pretty much all of them except for one. And I think this is an absolutely huge achievement and really the result of the very hard work that has been going into building the market and building the platform over the last years. You know, also worth mentioning for sure that we are engaged and working for you know, the biggest advertisers in the world. We're very focused on the top 20 in the United States. We're talking about big names. I'm not allowed to call out who they are, but in general, we're talking about the biggest spenders in the world, including the likes of P&G, Unilever, General Motors, and so forth. So for a company that has a new format and a new technology to bring to the market to be engaged already pre-programmatic with these massive players is, again, a very big achievement. And now comes, so if we say these are the building blocks in terms of the market environment coming our way, you know, as seen from also the engagement of the supply side partners and the advertisers who ultimately pay the bill. The pivotal moment is really our programmatic readiness and the platform maturity where we are now. And Philip will expand on that in a very comprehensive manner so that you also get a view on the history of the development of the platform and what has been happening since we redefined the strategy for the company after I joined in 2019, and where we are today in terms of really being enterprise level, an enterprise level platform ready for programmatic, and programmatic is the only way this whole thing can scale, and it was always meant to be that way. So some stats on the right-hand side, just to underline what I've just said. A couple of minutes just to explain the dynamics in the industry. And last week, the big research and audience measurement company Nielsen literally released a big headline. And the big headline was about the fact that in the United States, the viewership in traditional television and cable broadcasting networks has fallen under the magic 50%. And that basically now means that an increasing or growing majority of viewers are actually not to be found anymore in television and cable, but actually in streaming and digital in general. And so what you see on the left-hand side is it's illustrative, basically showing, okay, linear is still in a healthy position. That's at least 2 years ago, and CTV, which encapsulates all these new ways of content distribution, including streaming, as sort of the emerging thing. And overall, advertising goes across these both these areas. And the future of TV, as you can see here, looks dramatically different. And we are seeing, we presented that actually a couple of months ago during our fundraising roadshow, that basically, especially in the younger age groups, I think traditional television and cable is about 25%. So that means 75% now are leveraging or using streaming and so forth. And streaming means that basically the ad loads have to go down, because streaming is either without any ads at all or very low ad loads, because you can't, even on systems or platforms where you pay a lower subscription fee because you say, I'm accepting ads, you still cannot run that many ads. So there's this magical 5 minutes per hour limit, which is imposed by the industry itself, kind of, because the users wouldn't accept more. So overall, as a result, what happens is that the ad load overall takes the available inventory in the industry down. Now, we could say that we're adding back, or the industry is adding back inventory through, as I just said, the advertising supported systems, but net, the overall available inventory in terms of its volume and value is going down. And this is exactly where we come in with our proposition, because as everyone knows, we are adding inventory where there was no inventory. It's net new, putting it into the content itself. And as we can deliver between 6 and 12 ads per hour, this is eventually even a humble representation of what can be done. And based on this phenomenon and this dynamic, and based also on numbers that we're seeing in terms of how some first major advertisers who are booking campaigns through Mirriad, and how much money they're already allocating to in content, we are feeling very encouraged to say that there's a fair chance that by 2026, the money or the budgets that have been lost because there is no inventory anymore, at least not the volume anymore, will actually be shifting into in content. And let's just say this is a 2.5% shift. That would result then in a $2.5 billion US market opportunity by 26. If we take a humble position and say, okay, Mirriad captures 20% of that volume, and if you discount from a revenue share perspective that we take 25% on average per on the revenue of our partners, that will result then in 125 million in terms of our revenue. So that is obviously a very, very, very encouraging development. Even it's of course tough for the industry, but as I said earlier, the drama has become very evident now, which takes me to the company headlines. As everyone knows, we've done another fundraise earlier this year, on the back of which, or within that, we have restructured for a second time the company to take the cash burn further down, and along those lines, also it's worth noting that we've completely exited China. Revenue, and David, you will touch on that in a few, has been 592. The market notoriously will obviously get better in the second half of the year. Mark, you will also speak a little bit about the fact that definitely the United States since Q4 of 2022 has been very soft as a market, and as a new solution that is not yet programmatically embedded, we have been suffering from that in terms of longer conversion times. good sales progress in EMEA, actually really very, very strong results in EMEA. And generally speaking, we're really on course. And it's not reflected yet, of course, in the revenue, but in terms of really being positioned and able to grasp and grasp this big opportunity that I've just shown, we are definitely positioned as the number one, as you can see by the fact that the majority of these major companies, entertainment companies, and when I say that, we're talking about the likes of NBCU, who are a huge conglomerate, as you all know, and they own Sky, they own NBC, they own Peacock, everything. Paramount, Warner Brothers, Discovery, Fox, and so forth. These are the majors that we're talking about, but we're also including the major so-called CTV companies like Roku, Samsung, LG, and of course also the big streamers. There has been in a positive sense, a real explosion in terms of advertiser and agency roster working with us. A big increase in repeat buying, which is a great sign. Significant platform developments. I don't want to steal any powder from Philip. And we're transitioning, and that's maybe the most important news as we start signing contracts and agreements with these major players. At the center of these negotiations and ultimately the business ambition, the joint business ambition, is programmatic, because that is the way growth will come and happen with this new format. Mark will show you a couple of numbers just to explain what the difference is between the manual phase that we have been dealing with until now, which has been important to even get the market going, compared to the real rollout of the ad format, which is happening in digital through the programmatic platforms. David, why don't you take over the next 2 slides to take us through the financials and a little bit more the details of the restructure.
Sure. So thank you very much, Stephan. I've summarized quite a lot of information on one slide. Obviously, we put out the release on the RNS a couple of days ago. So if you want to look at more detail on the finances, it's in there. Stephan's already said the revenue 592, slight increase year on year, up 3%. And within that, EMEA has performed quite strongly as a result of the major German broadcasters absolutely leaning into the product, and also a new client in the Middle East. US slightly disappointing compared to where we had hoped to get to, and Mark will talk about that in his section. But it's previously flagged very soft advertising market in the US. The operating loss is materially lower, and this is a result of the cost saving that we announced, and I'll talk about that on the next slide. Cash equivalents at 9.8 million, reflecting the placing an open offer that closed in June. And then just for people who want to analyze the accounts, I put an EBITDA bridge in there. I've said before, our finances are very, very straightforward. We've got a couple of add backs on lease accounting on the amortization line and share-based compensation payments, and then the R&D tax credit coming off there to complete the bridge. If we just turn to the next slide, Stephan, in terms of restructuring, I just wanted to make it clear that we announced 2 phases of restructuring. So for our H1 results in 2022, so this time last year, we announced that we would embark on a cost reduction program and exit the Chinese market with a view to saving 2.5 million on an annualized basis. And then when we went out for the fundraise with the fundraising plan, we said we would do another phase of restructuring, which would result in headcount reductions across the business. We have completed both sets of restructuring. So the first one announced was mainly complete at the end of 2022, but China we closed in 2 phases. So China was completely closed at the end of Q1 23. The second set of restructuring is mainly headcount based, but not entirely, was completed by the end of June 2023. Overall headcount has been reduced by around 36%. So it's a really substantive decrease in our headcount, and that is what is driving the cost saving. All of that restructuring now complete. So the results of that will start to flow through the P&L in H2 23. Thank you very much, Stephan.
Thank you, David. All right, let's talk progress in the market and in the area of technology and the platform. And I'll hand over to you, Mark, for you to start with the KPIs and the fundamentals in the business.
Great, thanks, Stephan. So overall, we're experiencing growth across all of our key KPIs, including the number of active partners and also the amount of content we're receiving from partners. But we're also seeing growth in the active agencies and advertisers. And this is resulting in a really significant number regarding repeat business. So we're seeing renewals at 300%. And this is significant because these are market-leading accounts who are having success with us, seeing great research results, seeing this improve their campaign KPIs, and eagerly looking for this to become a programmatic solution for them that they can mix into their overall media mix. So as we look at the H1 results, on the next slide, these were certainly not what we had expected coming into the year. It has been a soft market, but we remain focused on key market leaders. They're the ones that are going to influence others to follow, and we're seeing really high engagement from so many of them right now, especially for the programmatic offer as we begin to prep to roll that out. So while H1 was weak, we will see an uptick in H2. That's due to some market improvement in the overall advertising market, seasonality of some of our content and our offering that we tend to have stronger results in Q4 historically, and also new partners that are coming on. So if we look at the next slide, we've made regarding supply, we've made massive progress this year with our major supply partners, and programmatic is really driving the interest here. There's never been a greater need for our product. Stephan talked about the macro conditions in the marketplace, and really the fact that these suppliers are tapping out in terms of how many commercials they can pack into their content, especially in the streaming environment. Consumers just won't tolerate the same level that they did in cable, and that's what's making all of these top tier partners lean in and engage and look to roll out our product. So the conditions have never been better, and we're hyper focused on the largest players. Certainly have always been and have had to build this market by gaining the trust and building the confidence and showing that this is a very powerful ad format. But now we're negotiating with many of the large tier one partners, and they're all looking to test, just like Stephan referenced before. So programmatic, again, is driving this due to the ability for it to scale. And that's a very important point. We have major programmatic integrations that are currently in progress. So as we really have thought about the first half of this year, reflecting on where the revenue was, but also the sheer amount of progress that we've made, this is really a turning point in our business. We've laid a foundation for the strategic and enterprise level product that we've been building, and the demand and interest for that has never been higher. So this is a very different situation than where we were before. It's only strengthened our position in the marketplace. It's now clear that this is an essential component to both suppliers and marketers' goals and how they're going to achieve their revenue results and also their sales from a marketing perspective. There just aren't as many opportunities out there to reach core consumers, and we're providing a very key, valuable component to that. We're making great progress also with all these partners integrating into the ad tech environment. Okay, so
Mark, if I just may interject, sorry, because you said many, and the reality is all minus one, right? When I look at this list, just to be very clear. And,
so that's where,
yeah, okay, please go ahead.
Yeah, we'll get into a little bit more of the details here on this slide, and this many of you may have seen during the fundraise as well. But we're seeing deeper engagement across all of our major constituents, and that's including the major market leaders in the demand vertical, supply, and ad tech. Stephan also referenced earlier some of the key accounts, and you may have seen them in the video. Market leaders like P&G, PepsiCo, and so many others here. We're working with 9 of the top 20 advertisers currently, and again, you're seeing that renewal rate at a very high level, which that's coming from these key market leaders. And to the supply point there, we are engaged. We're currently working with 5 and engaged with 4 others. So literally 9 of the 10 leading suppliers in the market here as well. And these are not just, mere conversations. These are, negotiations. These are, working towards proof of concepts and testing in market. So very different scenario than we were even a few months ago. So, and then, key to all of this is integrating into the ad tech ecosystem and leveraging existing platforms that are being used by these major players to make this a seamless transaction. And there, we also have, tremendous progress working with 9 of the top 15 ad tech companies. So it's never been more clear that we are the market leaders in this space. We are not seeing any competition at the level that, we're engaged with these major players across all of these verticals. And we don't see anyone being able to directly compete for some time. So want to dig into it a little bit more. So we talked a lot about programmatic, how pivotal this is in our business. This is a true step change in, the promise of what Mirriad can deliver to market. We've been building this marketplace and had to exist in a very manual process for a long time. And there's a dramatic difference in terms of how you can scale programmatic. This is exponential growth in terms of the revenue potential, the ease of execution, and the desire for both suppliers and marketers to activate campaigns. So the model you're looking at here was built on data that we have. It's an important component to our discussions with partners and how they view, taking on our service. But you can see here, if you look at the bottom, that's the very manual linear television way that we've been operating. And it is manual. It's very difficult. It's a manual, negotiation process. It's a manual integration process, passing files. What we're migrating to is, more like a trading desk. That's how media is transacted. That's where budgets are shifting. And that's the top model here, where you see CTV and SVOD and AVOD. These platforms are connected digitally. They're able to transact seamlessly in these systems. And, that's what we're building. And you can see, just with even a small amount of inventory at a marketplace CPM and not high ad loads, it generates exponentially higher revenues. So as we look at H2, the outlook is strong. As I mentioned, we're seeing improvements in the US ad market overall in the macro marketplace. We have seasonal content that there's a lot of demand against right now. We're seeing partners drive deals as well. So we've got external sales forces out there that are booking, and we've got new partner launches that are expected to come on in Q4. So we expect to run numerous campaigns and POCs with tier 1 partners in Q4 and continue to integrate our product into the ad tech ecosystem.
All right, thank you, Mark. Philip, over to you.
Thanks, Stephan. Afternoon, everyone. So in the next few slides, I want to talk about where we are from a tech perspective, but I think it's important very quickly to see where we've come from. I think it will build some context for you and see how we've arrived at our programmatic buying goal. So on the left-hand side, what we term Mirriad 1. Back in 2015, we needed to build core video effects and computer vision tooling. The features didn't exist for us commercially. Most importantly, we needed to be able to identify opportunities within content and place brands into content. At the time, virtual product placement, or VPP, was a big step up from physical product placement. Coming to Mirriad 2, so 2019, we saw, I suppose, an immense increase in automation around our core tech that we created. We needed to do this to provide a degree of self-service, volume automation and production, and these were essential to service our Tencent relationship, who are our biggest customer at the time. Mirriad 2 moved the dial from special effects into a mature business workflow. But Mirriad ads were still very much about permanently embedding a brand into content. Unlike conventional ads, there was no dynamic capability to start, stop, or change ads according to campaign rules. So you haven't got an ability to buy an audience with Mirriad 2. Fast forward to 2023 and where we are now, and what we're calling Mirriad 3. This is an absolute step change. It's all about programmatic buying of Mirriad ads. It's targeted at servicing our tier 1 media partners using tech that they're familiar with. We're not asking them to reinvent themselves in any way. Programmatic buying is the only way to achieve scale. I think Mark's covered a lot of those points there. And this will all be enabled through our new VE3 platform. Next slide, Stephan. Thank you. So a little more about VE3. It builds on the ad tech we've created to date through Mirriad 1 and 2. It delivers on our programmatic agenda. First of all, it allows Mirriad ads, our VPP ads, to behave like any other ad format. And this is a really important point. It uses our proprietary fusion technology. Ads can be dynamically started, stopped, swapped, and targeted. So audiences can be programmatically bought. It leverages existing ad tech ecosystems and standards. And so it means it's an easy lift for our partners. It's something we've been working on for the past year. We've already had successfully delivered several high-profile proof of concepts, as well as a successful commercial trial. And it's due for full commercial release in H2. Next slide. Thank you. So quickly looking at other important aspects of VE3. It's a programmatic end-to-end solution. End-to-end is just as important as programmatic. We believe it's unique in the marketplace. We continue to use AI to identify opportunities and generate inventory. And we further build on the functionality we've created, but we also leverage our Microsoft partnership. And that accelerates our AI development and our roadmap. It also liberates us to focus on key aspects of the platform that we think are unique to us. V3 is a straightforward integration. It's accessed by our latest API using industry standards. It's an open architecture, and so we can leverage third-party tools. Again, that allows us to innovate faster and provide self-service opportunities. Finally, V3 has been designed rather than evolved. Security and scale are core design principles, and the extensible architecture provides a high degree of future-proofing. If I was going to summarize it, Mirriad V3 enables programmatic buying of Mirriad ads at scale. Stephan.
Thank you, Philip. I think just to build a little bit or to add a little bit of color, Philip. So, you know, point number 5 in terms of security and scalability, obviously that's the prerequisite pillar, entry ticket, whatever we want to call this, when the task is to sign a contract with the likes of, and I'm randomly picking names now, with Warner or Paramount or NBCU, because these companies obviously need to have absolute, how can I say, protection in terms of their IP. They want to have absolute guarantees in terms of the uptime, etc., of the platform, and building towards this high performance and secure platform has been a huge endeavor. And as part of that, I think it's worth noting or highlighting also the partnership with Microsoft, which is, you know, in these terms also prerequisites to what I've just said and what you've just said, and is basically paving the way into being ahead and staying ahead of the game, because especially in the area of AI, everybody talks about ChatGPT, but the way to think about Mirriad now is we have access to ChatGPT directly through the pipes of Microsoft, and are benefiting from, you know, them, Microsoft sharing with us roadmap information, etc., so that we can align our, you know, product developments to theirs, which is a huge advantage. So the decision to go for Microsoft and to partner with Microsoft, which we took 1.5 years, almost 2 years ago, Philip, I think was a very, very wise move. A couple of words regarding the board changes. You have seen that Lois Day and Alistair Kilger have stepped down from the board. This has come not as a surprise to anyone. You might know that Lois was representing IP Group, and Alistair has been one of the original investor directors. Lois has been the third, I think, right, David, representing IP Group. And it was always planned that at some point they would be leaving the board, and which takes us down now, just from a numerical standpoint, account-wise, to a healthy situation with 6 board members overall, 4 of which are independent. As a summary, and this is the last slide before we come to the Q&A, where we'll have a nice and good 20 minutes. The market is huge. We know that. I know that at times, or probably all the time, there's the question, why is it taking so long? Why is it taking so long? Is it working? Is it not working? Why is it taking so long? The reality is that integrating into a marketplace that has an established way of working and has established players who are huge companies is not easy. This is just a very, very challenging thing. And it had to do with resilience. It had to do with great arguments. It had to do with, you know, bringing the likes of P&G to the party, saying, we want this, we want this, we want this. And as hopefully Mark was able to illustrate, we are now finally at that point. We have been aiming for all these partners all these years. Now we have contracts on the table that we're negotiating. The others are just kind of imminent, I should say. So we are now in a formidable position of being the one leading solution for this new format, which the industry regards as one of the key solutions to the revenue issues. And this is where we are. And breaking into such a huge market is just an immense endeavor. It has taken time, and it's by no means finished yet, but we are definitely at the point where with the first integrations, hopefully we'll have our first Apollo moment. We are, as I've just said, the leader in the sector. The position in the US couldn't be better. We have had commentaries who, you know, take it as a positive. Mirriad is the Kleenex of in-content advertising and virtual product placement. In other words, we are seen as being synonymous for this new advertising category. And this is, again, this is all sides. This is the big entertainment companies. So basically our supply partners, the advertisers and the agencies and so forth. Philip has explained the platform capability and our programmatic readiness. Here again, we are the only ones who are able to actually do this. And the advertiser demand is growing, and it will get really unleashed in the very moment we can offer advertisers the possibility to buy the inventory in digital platforms where just at the press of a button, they can book $1 million or 2 or 3 against an audience. And that's exactly how media works today versus the manual, I'm P&G, I need to meet Mark Melvin to discuss a campaign that is tedious and that's not really rewarding. So we have a clear path now. We've always said that we needed to build the entire business towards the unfolding of programmatic. This is where we're getting now, expecting recurring revenue from programmatic in 2024, which will also be very helpful because in terms of forecasting revenues, which in the past and still a little bit is quite hard because in the manual configuration, it's difficult to foresee and forecast precisely revenue. Once it's programmatic and the machines basically do the transactions, there will just be averages that we can take and growth rates that we can take to just extrapolate what the future brings. Finally, we've reduced the burn in a streamlined organization. We have a laser focus on taking also the break-even point much, much earlier. One final point, and eventually the most important point, is that even if the team is way leaner, and there have been some very difficult decisions, of course, that we needed to take, I think it's fair to say, and everybody here on the call from Mirriad will confirm this, that the team is more motivated than ever and seeing definitely now that we're bringing this thing over the line and everybody's absolutely committed and engaged, rolling up the sleeves and getting through this very first moment, which eventually, and finally, last point, if we're looking for what are the signs to look out for, then I would say definitely it's the first big signature. You know how I mean this, that is supposed to come within the next month or two. So Alex, this is our last slide. So let's go over to the Q&A, please.
Brilliant. Thank you, Stephan, and the rest of the Mirriad team for that very clear and upbeat presentation. We are now going to take questions. We've had quite a few in already, but if you do want to ask one, please type it into the box at the bottom of your screen. We'll start off on a question on competition. It talks here about, in your annual report, you identified various key risks, one of which was competitor risk. Mirriad is one of the sole providers in this technology space protected by long-term patents. Are you aware of any potential medium-term challenges to your market-leading position?
Philip, could you take maybe just from a technical standpoint, and then Mark, you take over in terms of the market and what you're hearing and seeing and being told?
Yeah, sure. First of all, I think the answer is no, not aware of any competition at all. We have the most complete end-to-end solution. We're ready for programmatic. And both those points are not just our opinion, but our partners too. I think lots of other people have a single piece of the puzzle, but replicating what we do isn't very easy. You need both IP and expertise, and no one's managed to put it together yet.
Yeah, and I can build on that too, anecdotally, from the deep conversations we're having with all the major players. They have evaluated the full marketplace. They have been looking at whoever could potentially deliver this product for them. And it's very clear as they all come back to us that we're the only ones with the full end-to-end. You know, we've seen scorecards where we rank #1 in terms of quality. We rank #1 in terms of the technology, really the service level that we're able to provide. And to Philip's point, I think if you look back at his, Mirriad phase, 1, 2, and 3, other players may only have a piece of one of those components, not anywhere near the full phases that we've developed over the years to bring to market. And that's very clear to all the partners we talk to.
Okay, thank you. Question here is around profitability. So the burning question for any shareholder in a young, innovative company such as yours is, when does it hope to become profitable? Do you have a better sense of this, when this might be, following your recent restructuring? Has trading in July and August so far confirmed your positive outlook for prospects?
So I'll take this one, David. Maybe you can help me. Of course, we're not supposed to disclose any numbers and give forecasts and such. Maybe there's a good way to approach the answer, sorry, just by saying, again, we are either negotiating or about to get into that phase with, all these major companies except for one. And even that one, right, Mark, is eventually not there in the US, but in other major territories. But that being said, these companies who how can I say, like, if you take NBCU, I think NBCU makes north of 10 billion ad revenue in the US alone. And if we just consider, them, of course, going downwards in terms of ad revenue from traditional means, and having huge revenue pressure. And if we just take this other equation that I showed earlier in terms of 2.5% or 2.6 by 2026, it gives us an indication in terms of what we're talking about. So if we were able to capture 2.5% of these 10 billion, then that is a very big number. Then our share being somewhere between, let's just say 25, then you have the number right there. Now that's 26. It's a bit difficult for us to really, put the start and end point to the numbers, because it's also a little bit of new territory to us, how dynamically this will change once we introduce programmatic. But clearly, it will have everybody would be very surprised if this wouldn't have an exponential effect, especially also because the buyers are just sitting there and waiting. And we know from, again, I can't say who it is, but basically quote saying, as soon as this is programmatic, our dollar floodgates will open, and that's the attitude there. I'm trying to give a little bit more now in terms of, David, our runway is much longer now, and I think we have considerably pulled forward the break-even point from where it was in the past. If you look at the numbers that were in the market, so very significantly pulled forward. Again, many things can happen now. And in Q4, Mark, correct me, but what we've heard is from one of the partners, they want to start with 4, 5, or 6 high-rated shows. Correct me if I'm wrong. Right? Yeah. And that alone, tells 2 messages. One, they're taking this seriously. Otherwise, they wouldn't be doing this with us anyway. And taking it seriously means putting serious stuff on the table to work with. So I'm sorry, I have to stay vague, but then at the end of the day, what is the factor of programmatic versus manual? And Mark, you have shown the numbers, right? It can be easily a factor of 10 in terms of how much volume you turn.
I could add to that too, just in terms of the engagement we're seeing from major brands, their desire to transact this programmatically, and what will happen when these large tier 1 partners have this capability in their tool set. They leverage everything that they sell, and their sales teams will be out there including this as just part of the package. And that's a very different situation than what we've been in, where we've had to really advocate and sell on our own. So it's a dramatic shift.
Yeah. So maybe another way, Mark, to say it is they have to make money with us now, versus it would be a nice to have, which eventually was more in the past. But the pressure is so enormous, they have to make money. Sorry, Alex.
That's okay. Look, just as a one follow-up to that on the programmatic side, which is, if you did have a tier 1 supply partner sign up this week, how long would it take to implement that and see the revenues actually come through to Mirriad?
Mark, you want to take that?
Yeah, I can take that. So, the stages we're at, these companies go through a pretty long vetting process, and once they're ready to sign, they have most of the pieces in place, especially technologically, when they're going to launch programmatic. So it could take anywhere from maybe 2 to 6 months to actually fully roll out and get their sales teams activated and start to see significant transactions. So it's not a very long timeline once we sign and are ready to go.
Great, thank you. We've had a sort of few questions along the same sort of flavor regarding share price. So I'm going to ask one which I think sort of captures things. As a long-term holder of the shares, I'm frustrated by the current share price. I supported the raise at 3p, and the shares are a long way below that in a couple of months. What are management doing to change this situation?
So let's also be clear, but I guess almost needless to say that we've been investing as well all the time and are utterly frustrated as well. So we are in the same boat here and trying everything we can to change the situation. So let's just be clear on this, that we're not taking this easily at all. The contrary is the case. I think when we look back at the history and the development, and David, maybe you can also specifically talk about why or what has happened in terms of the share price after the raise. But basically, we have to do one thing now, and one only thing, which is let us sign, a contract with eventually the biggest entertainment company in the world or in the US, and maybe the second largest and the third largest. And within these contracts, let us start activating programmatic and getting the revenue in place in a way more substantial way. That's our response. That's what management is doing to get the share price back up. I don't think that anything else is as meaningful as the focus on the business, I should say. And David, maybe you can just add a little bit of color in terms of technically what has happened.
Yeah, so I think everyone's aware that we got quite a chunk of money in at the placing from O'Day Asset Management, and everyone also will be aware that that stake was likely to be liquidated. You'll see from the disclosures, the TR1 forms, that nearly all of it's gone. So there was a really huge amount of volume of shares in the market. We also had Parkwalk, one of our longer term investors, sell down a third of their stake. So I think basically we saw the share price reduce from kind of the 3 pence down to kind of 1.5p in 2 tranches, one around the first disposal by Parkwalk and one as O'Day were selling off, and then the price has just sort of sat there since then. I mean, the thing that we can do to affect the share price really is produce results for the business, and that's what we, as Stephan said, need to be focused on. There is a lot we can do to manage our own share price, and also please bear in mind that there are long periods when nobody in the management team or on the board is allowed to buy shares, but there have been some share purchases, so our chairman bought shares, etc. So, and all of our senior staff are incentivized to get the share price up because they've all got options, and huge swathes of our company share options are significantly underwater. So everyone is working in order to get business results which will push share price.
Thank you, David. Got a couple of questions here on the technology side, and really about programmatic and how much further technological work needs to be completed in order to start programmatic, or I guess, is programmatic ready to go? Can you give any further details about any further technical work that needs to be completed in order to start programmatic sales?
Yeah, I can.
Okay.
Yeah. Nothing more is needed from Mirriad. Clients might require some specific integration work, likely trivial around our API. We're currently supporting a tier 1 partner to turn a proof of concept into a commercial grade integration. We've got all the necessary functionality, and indeed we've already delivered a commercial proof of concept. So we are ready.
Brilliant. Thank you, Philip. Very succinct answer. Mirriad is ready to go. Question here about the sort of the economics, really, which is, can you explain in broad terms how the gross margin is distributed between Mirriad, any advertising agency, and the content provider?
Sorry. Okay. Let me try to answer this question. So the advertiser, the chain, let's talk about the chain, how things work. So the advertiser, let's just say P&G, pays $1 million through programmatic systems. So basically through the trade desk, right? This is their platform, actually happens to be the platform that P&G uses the most. So P&G invests $1 million. They press the 1 million button on the trade desk, and then that money is being spent across multiple suppliers, right? Depending on who basically surfaces the inventory that fits the criteria that P&G is asking for, right? It could be an audience, it could be audience and a kind of content, etc., etc. And basically now the inventory, or the supplier who has delivered the inventory, or the suppliers who have delivered inventory that P&G has been buying with their $1 million, they get repartitioned the money, so pro rata. And let's just say NBC gets whatever, 400,000, and anyway, the rest. And we will get paid then by, I'm simplifying this, by NBCU. We would get our money from Warner, from Paramount, from Fox, etc., etc. That's how it works. So effectively, the revenue share happens mainly between the content provider who is ultimately selling the inventory, and us.
Brilliant. Thank you, Stephan. Moving on to the Microsoft agreement, which you announced early this year. Question here asking if you could expand a little bit about in terms of what does it involve? What does Microsoft bring to the table that Mirriad didn't have already? Yes, could you just enlarge a little bit on that Microsoft cooperation?
Philip, you go first.
Yes, sure, Stephan. So technically, we've got direct and deep support in the Azure cloud space, as well as cost incentive from Microsoft. So that's a benefit to us. We're currently using Microsoft's AI for object recognition, and we're exploring further generic OpenAI possibilities together. That liberates us, relying on their army of developers to provide generic AI to us, to focus on proprietary elements unique to us. So that's what it delivers to us. I think in terms of what it delivers to Microsoft, probably more commercial, Stephan. I might hand that back to you.
Yeah, I mean, the commercial intent, and we had a long meeting last Friday, is ultimately to bring the Mirriad solution, which could, by the way, live in components, right? So think of it as a couple of Mirriad apps. I'm just simplifying it for the sake of the answer. And these apps now being buyable, it's a very strong simplification, but being buyable in the Microsoft marketplace. And because our apps or our solution is ultimately running on Microsoft Azure's cloud, and it's processing with ChatGPT, et cetera, or OpenAI, it's all cloud and transactional consumption, which Microsoft benefits from, of course. The benefit for us, I guess it goes without saying, that once we are also in the marketplace of a company called Microsoft, we will be accessible in a very, very kind of plug and play manner to the entire Microsoft customer universe worldwide. And that should help us significantly in terms of the go-to-market overall.
Okay, thank you. I think we've got time for one last question here, and apologies that we haven't been able to take all the questions. We've just been inundated with questions today, but I've tried to take on the most popular ones. Question here is, if you look at the content that you sell into, film, TV, influencer videos and music videos, how important are those different sort of revenue streams?
Mark, you want to?
Yeah, I mean, they all have and play an important role, because as advertisers are looking across all content types, all video types to reach specific audiences, they mix in different formats to achieve that. So say music video or influencer will reach a younger audience. Streaming now is reaching a younger audience, whereas linear television is reaching a very old audience. So they all play a part, but the most important is anything that delivers a very large audience. So the scale is typically what advertisers are looking for, or specific targets. So programmatic's going to open up a broad, swath of content that's able to deliver against advertiser targets. So it's having a wide array of content for them to target against is critical. But again, reach and scale is important. So, getting these large partners on with hit content is what we're working very hard on right now.
Brilliant, Mark, Stephan, David, and Philip. Thank you very much for that presentation and answering those questions.
Thank you.
That brings us to the end of today's webinar with Mirriad. I just want to remind people as you leave, there's a survey that you're asked to complete. It'd be really helpful if you could spend a few moments answering those questions. I know management feel that's very helpful to them. Thank you all to attending. Thank you to our presentation team, and we hope to see you all soon.
Thank you.
Thank you, everyone.